Mutual, of course, the oldest of them all, was established as early as 1845 in Cape Town. You can still go and look at the original building. It's now a global long-term savings, insurance and investment group, headquartered in London, right? But it's got a market cap of 141 billion rand. Assets under management, they go up and go down depending on currencies, but last I checked, something in the region of about 300 to 400 billion dollars. Now, in addition to its many insurance operations, it also owns Nedbank, right here in this country, and short-term insurer Old Mutual is called Mutual and Federal. It's got a price-to-earnings ratio of 17.5, dividend yield of 2.8. Levon, this one has done well since those dire days when people worried about whether it was going to survive back in 2008, 2009. Just take us through what happened back then and how they've recovered since then.
Old Mutual is a diversified in investments and assurance insurance giant. So back in the dark days of 2008, a lot of its international investments, its European and UK operations had been under some threat. The share had fallen to almost 5 rand at one stage.
Right.
And that was mainly because investors were afraid that Old Mutual had too much of UK.
And it had written a whole lot of US life policies based in Bermuda, which had been like underpinned and guaranteed. And you know, when the markets collapsed, they didn't anticipate the extent to which they'd have to add extra capital there. So this globally diversified group was caught to some extent with its pants around its ankles.
And they were very forthcoming. They were transparent to the market. They also disclosed more than the allowable amount. They overestimated the possible loss factor.
Yeah.
And so the stock was hammered quite sharply. As far as the group goes, it's a very smooth operator, good exposure to a number of markets. Asia, Europe, North America. It's a very diversified currency income. It's got a very good mix of business exposure. So it's got a healthy exposure to property worldwide, a healthy exposure to financial markets, as well as you mentioned earlier on, short-term insurance, long-term insurance. Right. So a very good mix of different businesses and a very healthy exposure to investment type businesses. That is to say UK stockbroking firms, asset managers worldwide. And I must say, when I did a search today amongst a number of peer analysts, I see that Old Mutual had been rated as a strong buy.
Okay, interesting. So what you're saying is that the mood has improved substantially. Under Julian Roberts' management, it's kind of regained its favor. People like the emerging markets insurance presence that it has in Africa. They feel that that's a plus. And the people are not really too anxious about the capital adequacy ratios and all that. In the US, they're talking about potentially listing or selling more assets of that US asset management operation they've got. So net, your sense is firing on all cylinders, 30 Rand a share almost, or probably thereabouts. I don't know. I mean, we used to hate this thing, but now you sound as though you love it. I mean, are you hot on this one?
When you go through all of the checklists, it seems to be a fairly safe bet because of its diversity, as I've mentioned currently.
And what about Nedbank? Still in the group, not selling it, own 50% of it. They like it now. It spits money.
There's always a bit of a rumble ahead of the financial report, and every now and again, rumors that do the rounds that Nedbank may be sold to some foreign giant. The global climate isn't right. I think world banks are under threat. So for now, South African banks...
So who's going to buy them?
South African banks still look attractive. I'm sure Nedbank is one that they'd like to continue holding.
Okay, so we got 6 stocks to get through, so we're going to have to go quickly. So on this one, you like it still at present levels?
I'm hot on this.
Hot on this. Okay, I'm not too sure. I'm going to have to decide. I'm going to go with not hot.